Hello amigos, in this video we're going to take a look at the price of gold and we'll do technical analysis on the gold chart. Before we proceed, disclaimer, this video is for educational purposes only and is not a financial advice. You'll have to do your own work. Okay, so what we are looking at is spot gold, and this is a chart going back to the March of the year 2022, so that's the current year. And here, I believe that was the all-time high reached back then. And what we see is actually a slow motion price cascading down till it reached a pretty important point, which is around here. And we'll just call this a double bottom here. In fact, it reached one time, two time, three time, and it did not go lower. So price rejected lower prices and boom, it went higher. If you're interested in looking at our long-term analysis, which we did last year, and why this price level where price actually rejected the lower price, um, please have a look in our archives and you'll be able to find a video on gold, which we have a look at on a monthly chart, really long-term perspective. Okay, so I'll also try to put a link below in the video if I can. Okay, so just taking a look at what the price is doing. It starts from the left hand side around that corner of the screen and it's going down, down, down. Okay, so let's start to have a look at it. Had some rallies, some bounces in between. We take that and let's just clone this. And when we clone this, we bring it to the next rally. It didn't even reach quite the potential of the previous rally. Nonetheless, it did rally, but the price did not go anywhere. And thus the third rally it had. So you begin to see that there is like a symmetry here. So price rallied for this much, then it rallied for this much, didn't go higher. Higher prices were rejected, moved lower. Then the market tried to rally. It rallied about the same as the first rally here. Higher prices were rejected and then moved lower. And then what we also do is let's just copy and here. So that's and yeah, this is another rally where you can see that it's the same market actually rallied the same amount as the first rally, and you can see that there's a symmetry in the marketplace. Now, this recent rally which we had since the um, since the beginning of the month of November, starting at 3rd of November, what we can see is that this bearish symmetry, if you would like to call that, where rallies rallied for this much and higher prices were rejected and the market moved lower, this seems to have broken. So this time the market actually rallied pretty strong, and if it were to get rejected, meaning the prices were to be rejected moving higher, we would have anticipated, because of the bearish symmetry here, this was the region and would have been a perfect double top as well with this top. But that did not happen. So let me actually try to draw this for you. Okay, so that's our horizontal line, and the it would have been around this level where we would have expected the price to be rejected, and would have been a double top here. So this rally is what it means is because it broke this bearish symmetry here, is a pretty important rally. So what we should do is we should pay attention to that, what the price is telling us here. Now, it's an important rally, but it's also reaching some really important and critical levels. And what are those levels? So if we just draw a Fibonacci retracement, taking the highest point back in the month of March 2022, and we draw it to the lowest point. In fact, this is a double bottom here. Let me actually write it. In fact, it's kind of like a triple bottom, but we'll just call it double bottom here. Double bottom. Okay, here. What we see is that we have got the 38.2% retracement level approaching around 1790, and I believe the highest point price reached was 1786. So in about $5 range, it is pretty much um, in that area. And also what we have is, if we just take our Fibonacci tool and we do an expansion of this swing, then the 1.618 comes around 17, let me just move it there, 1799. So just trying to make it easy like this. So what it means is that we need to be watching this area around 1790 to $1800 per troy ounce as a important resistance level where the price could actually find a resistance and perhaps move lower. In fact, let me just blow this up a little bit so it's easier to see. What we can see here at the moment is that um, last trading day, so that's the 16th of November, the market actually formed an inside bar. So that is kind of like an indecision. So here, the way we can look at it is that if price takes out the high of this bar, then perhaps it goes and finds resistance in this hour zone, which is anywhere between 1790 to 1800, which would also mark a double top here. So with this structural resistance coming up here. So let me actually draw this structural resistance line here. So we have some structural resistance here. Let's see, possible double top resistance. Okay, here we go. So we kind of have a confluence of few things coming up. We have the Fibonacci 38.2% retracement of the March 2022 high and the 1.618 expansion, and then also we have this structure coming up for a possible double top. So we need to pay really good attention to this level should the price begins to move there. It's also possible that, if the price begins to take the low of this 15th of November bar out, because an inside bar formed on the 16th, it could perhaps rotate lower. So in that case, let's take a view of what could be the possible support levels. So what we see is, if we just do a Fibonacci retracement of the swing high, which broke the bearish symmetry, then we have the 38.2% retracement come around 1720 level, and that is also 1720 to 1720 21 level, and that also coincides with the structural support here if the retracement were to go in that direction. So this is what we are looking at, and we should be paying really close attention to the levels I have mentioned, because of a possible double top, because of the structure, and also the Fibonacci 38.2% retracement and the 1.618 expansion coming into that zone, and forming a price confluence level. So what is another thing about this is, if this move of this double bottom here, which we looked at, if this is a really bullish move, then price should not move much lower than the 38.2%, and perhaps coming into the 50% retracement regions, because in really strong trending markets, the retracements tend to be quite shallow. So that's why it's really important to actually watch the 38.2% retracement level coming right in the confluence zone of the structure here, which previous resistance usually turns into support level. So that's what we are watching. and keep on watching these critical levels in the next few days trading. And we wish you good luck and good trading.